What's good, guys? We are gonna get started in like 60 seconds, probably like 60 seconds. I'm gonna, get ready. But yeah, we gonna get started in like 60 seconds. You guys, drop where you tuning in from in the chat. In the YouTube chat. Let me know what city you guys tapping in from, and we'll get started shortly. It's a thunderstorm going on right now. I hope we all good. That's all I'm gonna say. I hope we all good. But yeah, let me know what city y'all tapping in from. All right. Let's see what's going on here today. It is March 26th. What's good, Steve-O? It's March 26th, 2023. And we are live with another weekly market outlook, man. I'm definitely excited for this week as we're starting a new month, I believe. Let's check it out real quick. We are starting a new month this week on. Oh, okay. Nope. We actually got a full week of trading March. April 1st is not till Saturday, so we still got March all of this week right here. Let's check out what's going on. Let's check out what's going on in the news. Let me go ahead and switch over to investing.com. It's where I go ahead and do all of my news related action, right? But like literally what we do on here on Market Outlook is I just go ahead and start off checking out news things going on this week, like things that could affect the markets, things that'll impact the market. Let me see, how do I switch my screen? Right, things that can impact the market and affect our trades. You feel me? So like that's the first thing that I like to start off with. And if you yourself are, learning how to if you yourself are learning how to start off, in these markets and things like that, like that's the first thing that I do. So right here, you can see on my screen, this is investing.com. So where I go ahead and every week we pull this up, first things first, right? And see what's popping, man. See what's popping. So to this week, and I want to change it to a 3-star news. Okay. Change it to 3-star news. So this week, man, we have news all week long. We got news all week long. We got Euro news dropping today. Well, tomorrow at 4 a.m. So one thing we'll do is we'll check Euro USD before we hop off here too. We got Bank of England speaking tomorrow afternoon. AUD USD retail sales tomorrow. Okay. And then we got a bunch of speeches on Tuesday. Y'all hear that thunder in the background? It's going crazy, right? We got speakers, right? Different speakers. We got the governor speaking, meetings, the president in Europe. And then we got pending home sales on Wednesday. It's not going to be too OD, but it'll affect the markets for sure. We got German CPI, which is German inflation, and Germany is the hub of economic activity in Europe. So typically, their inflation releases and their interest releases will impact the markets heavily. So we could pay attention to that for Thursday morning. And then we got GDP for the US dropping on Thursday as well. That's very important information. They're projecting it to come out lower, right? So we're projecting that on Thursday, we'll get the report that the US is making less money than we were last quarter, right? So pretty much, right? I believe from the fourth quarter of the year. Now, and then on Friday we got the GBP GDP, GBP GDP, and then we got unemployment change for Europe and core price index for the US dollar this week. So I'm not gonna lie, man, I'm ready because the beautiful thing about these news releases, it's nothing crazy like NFP or FOMC or something like that. Like if you guys are familiar with that, FOMC, NFP, they're more they're more, as you would say, like I don't want to say like commercial, but those are marketed events. You know what I'm saying? Like people literally, you get on social media, people are always talking about CPI and NFP, and like you could definitely catch some very big moves on those days, but you can also catch some very big losses on those days, right? So if you're somebody who hasn't reached a point of consistency in your trading plan yet, or you haven't reached a point of confidence in your trading strategy or your trading results, I highly recommend that you stay away from the days or even the sessions where you're gonna find like NFP, CPI, or FOMC releases, right? But then when you get something like this week coming up where it's not a whole lot of it's not too many like major news releases. Like these are all three folders, but they're not, like I said, NFP, FOMC, or CPI, right? Things that majorly move the markets at one time. You get what I'm saying? So that's this is a good week, especially, for people who maybe they're not the most well versed, because it's not like any mines, like any road mines. You know what I'm saying? Recently, so far in March, we've had a lot of crazy news go down in March. Last week, we spoke about the Silicon Valley Bank crashing and how that was a sign of like things that we already were aware of. You get what I'm saying? Them continuing to raise interest rates. The more that they continue to raise these interest rates, and guess what? The more that they continue to raise these interest rates is going to, the whole reason is because they want to fight inflation, but raising interest rates means you're paying back the cost to borrow money, right? And that means that people who are not already in fixed interest rate loans, their rates are going up. So every month you got people paying more and more money to their debt, and more people who can't pay their debts because they don't have the money. And that's going to affect these banks, right? Because it's going to slow down the amount of money that these banks are making, because you're going to have less people borrowing money, and on top of that, you're going to have less people paying back money, right? So at the end of the day, that's going to put a lot of pressure on the banking system. Now, last week that just passed, we had on Wednesday the U.S. Interest rate decision announcement, right? And if my stream cuts out, guys, like I said, it's because we're having a crazy thunderstorm here right now. I'll do my best to hop back on, maybe from from my phone or something like that if I have to. But if I get knocked out, that's what happened. You feel me? But at the end of the day, when it comes down to it, on Wednesday of last week, we had the U.S. federal interest rate decision, right? It came out at 5%, which was the actual, right? And it was forecasted to come out at 5%. So it came out about a quarter of a basis point higher than where it was previously when they released it. And the last one was February 1st, right? So February 1st, they raised it. And then this time they raised it. And so we're going to continue to see that put pressure, you feel me, on the markets. So this last one, and for anybody who's not aware, whenever you're on these news releases and you see somebody's going to speak, or like the interest, like this press conference, you'll notice there's like a little sound thing next to it, and you can see it says speech, right here it says speech, right here it says speech. So instead of watching the news, or instead of just watching podcasts, you feel me, and or just just watching stuff, you can actually click this, you can click source, and you can actually go directly to the source and you can actually watch them announce, what they're talking about. Now, if you're somebody who it's hard for you to follow information, maybe this is not the best for you. But for somebody like me, this is amazing that I can literally sit and listen to what he's saying about the markets that I know are going to manipulate the markets based off the way we trade. I'm not necessarily looking to hear him say, oh, things are doing great so that I can buy. That's not the goal. The goal, I want to hear what the majority of people are hearing. And when I say the majority of people, I'm talking about the majority of these big, big institutional traders, right? These big private traders, because that's who, that's who smart money is up against. You feel me? They're not worried about taking our stops and stop losses and stuff like that. You feel me? They're worried about taking the stop losses of big money. You got to remember, it's three entities playing against each other. It's retail traders, it's the big banks, and then there's professional private traders, private equity fund. If you know, you know, right? But at the end of the day, right, that's what you got going on, right? So it's like at the end of the day, the banks are hunting these private equity firms. That's who they're hunting. And those people, the majority of those traders, these private traders and these professional traders with large sums of money, the majority of them are trading based off of these fundamentals, based off of these retail concepts and these retail rules, right? That's what's happening. And so at the end of the day, yeah, like that's why I love to sit here and listen to it live, because when you're listening to it live and you hear certain things and you're aware of certain things and then you're looking for certain confirmations on your chart, it's game over after that. Get what I'm saying? So I see Steve on the chat, so he gets what I'm putting down. Appreciate you. So yeah, guys, like that's what we got going on. So let's go ahead and pull up a chart. All right, let's pull up a chart. Tell me what you guys was already looking at this week, maybe, right? Tell me what you was already looking at this week, what you traded last week, right? Just fill me in. If you tuning in late, you know what I'm saying? Just go ahead and fill me in. Let me know what you was trading. But I always, once I got an idea for the news, and next week I'm gonna go a little bit more in detail. I'm thinking I might actually bring somebody on with me next week that's really well versed in the news and different things that's going on in the in the political environment, economic environment, to give some perspective for us. You feel me? And to just chop it up with me. You feel me? I really want these weekly market outlooks to become not less charts, because charts are easy for me. It's very easy for me to hop on here, run down the chart. And so we could do that in like 20, 25, 30 minutes, but I would love to start bringing other people on here with me. And we can kind of talk about, like, make this more of a conversation, like traders conversations, like, more so us talking back and forth about the different speculations for the week after we kind of have our analysis. You feel me? So that's something that I definitely want to be able to do. But for right now, my bread and butter, man, I love me them charts. You feel me? I could look at the chart and I could tell you exactly what I see them things doing. You feel me? So interestingly enough, right, we are on the dollar. Okay. So if you're on here right now and you're tracking what process I kind of go through, I always start on news and being aware of what potential manipulations are going to come this week. Right. And after news, I identify the DXY, right? I look at the dollar index and I look to see what the price action on the dollar index is doing, right? Because the dollar index is how I strengthen the majority of my bias, just to be honest, right? Majority of my bias, I'm building it based off of the DXY, right? Like I could see, an uptrend on on NASDAQ, on the hourly time frame, but I go to DXY and it looks like the DXY is going up too. Well, NAS can't be going up because NASDAQ and DXY do the opposites of each other, right? Indexes like NASDAQ, US 30, or anything that ends in USD, like Euro USD, GBP USD, all those things go the opposite of the dollar, right? Anything that starts with USD goes the same direction as the dollar. So at the end of the day, when I'm checking out my charts, when I'm, marking up my charts, I'm starting with the dollar and I'm going based off of that pretense. You get what I'm putting down? So again, every week I start off on the weekly or the monthly just so I can get an idea for the higher time frame, right? And I'll put that on this little checklist too, right? And we'll say DXY higher time frame, right? That's what HTF means, higher time frame. Okay. It's up. All right, yeah. So DXY higher time frame. I always like to start on the higher time frame, and when I start off on the monthly, like yeah, I'm paying attention to structure. But I mean, if I just checked out the monthly last week, there ain't too much more structure for me to be looking for right now. You get what I'm saying? Like right now, I still believe that this right here is the monthly buy side liquidity for the dollar to reach for. There's just nothing in between here and here, right? There's no resistance in between here and there. There's no other highs, right? The most recent high before this high up here, right? Before this high. Okay. So this gray box, right? So here, the most recent high before that high was here, right? And I can effectively see that not only did they go over that, right? It would have been different if it was maybe like just a wick, right? If they maybe would have came to this and it was just a quick wick like this, or a quick wick like that, something like that, right? But we see that the market fully, we had a whole month close up there, right? So the month of September, right? The month of September opened here and closed above, right? Then you had the month of October opened here and closed above. So we had 2 whole months that closed above that area, right? Whenever I'm looking to see a reversal, I like to see a wick into that. Nobody taught me that. That's just me. That's just a confirmation for myself. I prefer to have if it's gonna go the opposite direction, they just tiptoe in that thing, kind of like when you get in the pool, but you're not finna really get in. You know the difference between somebody who's getting in the pool and not getting in the pool. And I think that's the perfect example, right? It's like at the end of the day, if you just toe tip a wick in that thing, you ain't really trying to go up there. But they nosedived in that thing. You feel me? We closed above it and then we pulled back. So for me, this is all just retracement action, right? So that is very simply the structure that I see on this thing on the monthly time frame. Now, what I like to pay attention to on the monthly time frame, especially when I've already looked at the monthly multiple times for that specific month, what I like to do is I like to go ahead and I like to pay attention to the current month, right? Because of the power of three, right? If you're not familiar with the power of three, just ask me in the chat what the power of three is. But if you are, ain't no reason for me to explain the thing, right? But at the end of the day, when you're thinking about the power of three, the candle has to build out a certain type of way, right? And we have 4 days left in this candle, right? So this monthly candle will end and another one will open in 4 days. Okay. So for me, I'm fully expectant that this candle will close. I'm expecting that this candle will close bearish, right? I wouldn't expect necessarily to see, the market just take off. And honestly, it could. We'll go on a lower time frame, but here's what I'll do, right? I will mark this. Let me not talk out my butt. Right, I'm gonna mark this right here was the open of March. Okay, that was the open of March, like monthly open right there. Right, that was the open of March, and this up here was the high of March. Okay, boom, that was the high of March right there. So we could put a green line right there real quick. Right, and then this was the low of March down here at the bottom of this wick. Right, so even without me looking at multiple candles, I'm able to read my chart because you just got to be able to read a candle. You get what I'm saying? At the end of the day, that's the candle tells me everything I need to know. Now, when I go down to the weekly time frame, right? Now, when I go down to the weekly time frame, it gives me a little bit more information. Now, clearly, I know that only about the last 4 candles or so, right? Only about the last 4 candles or so are the month of March, but it's still important information. Okay, so I take note of that. Now, I'll show you a perfect example of what I was talking about with the whole wick thing. Okay, now that I'm on the weekly time frame, you can see over here in the past, right? Boom, we had a low, right? So that was sell side liquidity, right? This at some point was weekly sell side liquidity. All right, so that means that there was orders built up under that thing. You can see they came higher. They closed above that area we were looking at. It wasn't a wick. They had a full close above, and then we see them pull back, right? We saw them give a pullback down into where? Right into that low, into that sell side liquidity, right? We saw them continue to come lower. Like right here, you can see they closed this candle here, this black candle here, it closed below over here, right? And you saw what? A continuation to what? The next low, right? All the way down until we reached this low. And what did we get? We only got a wick here, right? We got a wick, and then we saw a lot of aggression, right? Every one of these candles is a week. Okay, so if we have one buy candle, two buy candle, three buy candle, four buy candles, we had 4 weeks in a row of bullish price action. That hasn't happened since freaking over here when the market was in an uptrend, right? So it just giving me little telltale signs, right? Little telltale signs like that. Like, okay, cool. That hasn't happened since we were in an uptrend. Maybe we're ready for an uptrend right after we did what? We swept the lows. They didn't close below this. They dipped their toe in that thing and then they took off. You feel me? That was a really good analogy, I think, right? I hope you was able to catch that. So with that being said, I've been under the belief that the dollar is going to continue higher from here, that we've reached our, that low that we needed to reach. Now going over to the daily time frame, all right, and you already see what's going on, right? This was that boom, this was that low that they swept, and then this is that candle where they saw us take off, and this is where we are right now, okay? So this is where I'm gonna kind of put my attention on, all right? Right now, I have about the last, what was September? The last 6 months on the screen right now. And I want to identify a couple things. I want to identify buy side and I want to identify sell side liquidity. Now, this is the interesting thing for me, okay? Now, everything ain't just law, right? Everything is built off context as well. So, you gotta like remember that. Like none of these confirmations that I give you or any mentor honestly is giving you, none of them are just like, law. All right. Some of these things are like things have to happen together. That's what you call confluence, right? So it's like when I see this confirmation and this thing, or all these different thoughts that I have together happen at the same time, that's how I come to a conclusion for a trade idea. Other than that, everything is speculation or just me taking note of what's happening in the market. All right. Now here we can see on the daily time frame that we reached that low and they literally took off. And then we got a wick, right? You can see we didn't really close above it, right? We closed above the body of the candle. Sometimes that's the most important part. But when you look at the body of this high, we didn't close above that. We closed above here, right? We closed above here. And then we saw them trade just a bit higher to what? To this high. But once they reached this high, they failed to break above here and actually trade into it, right? That kind of gave me a little bit of like like, okay, like what are the markets really looking to do, right? And so then we saw them pull back. Now, my zone that I was looking to see the markets trade to, okay, was this gap here from February, right? From February. This was the end of February. I mean, not the end. This was February 2nd and 3rd, right? So I was interested in seeing the market trade down into that gap, worst case scenario. That was the worst case, and they came very close to that gap, okay? Now, the main thing that I was looking for is two things, all right? For those of you guys that are studying, you know that this right here being the last down candle before the markets took off to the upside, this right here would be what we call an order block, right? And whenever I find an order block and then I find on the right hand side the next candle after the move, right? So from the top of this, right, this last down candle would be an order block. And then to the top of the candle right after the move that passed it, right? So specifically, I have the top of this candle here where my red line is. And I have the bottom of this candle here. Okay. So that gap is where I've been looking to see them trade back into. Okay. And that's what we got on Wednesday of last week. We got them trading down into that zone. Right. So that's the zone that I was looking to see them trade into. Maybe, like I said, worst case scenario, see them trade down into that gap on the bottom side and then see them trade higher. Right. They didn't make it to the gap, but they just perfectly did what? They wicked down into the bottom of this gap or down into this order block, and then we saw them aggressively move away. But I want to see a couple. I want to see a couple. I want to see a couple, a little bit more on the dollar because this is drastically bearish. Okay, like for example, remember what I said. Like I like to see the market. I like to see when the market just wicks underneath lows. I don't like to see when the market closes below them. And over here, you can see this was that right daily sell side liquidity was right here at the bottom of this low, right? And they just barely closed under there, right? They just barely closed under it here. And then we had this candle open up underneath, and then we just got consolidation, and then we got the big takeoff, right? So I'm still determining whether this right here was a real fill or whether this was a, yeah, we closed below, we're going to go ahead and attack lower, right? Maybe just into the gap, or, you know, maybe we trade higher, right? So that's how I was viewing the dollar coming into this week. That's without me having done anything new. I'm just telling you, I'm just breaking down to you guys the thoughts that I was having, you know, coming out of last week. You feel me? So I personally, like I'm gonna pay a lot more attention as to whether or not we're bullish from here, right? Ideally, I would love for us to be bullish from here, especially looking at how, like, you just even look at this right here, right? You know, we perfectly hit this order block, bang, here, right, where they dropped into that, and then we had that massive, you know, opportunity to come out of it. So now what I'm going to want to see is, are they going to hold this, right? Are we going to maintain this, right? And the way I'm going to do that, I'm going to pay attention to the same thing I just pointed out over here, excuse me, is the same thing that I'm going to pay attention to over here, right? We had the markets drop down, right, to a low, right? Actually underneath a low, into a fair value gap, and then we had the markets give us multiple bullish candles in a row. We didn't have that happen since over here, right? Back on March 15th, right? We went over we went almost about a week pretty much with just bearishness every 4 hours type of time, until boom, we reach down here, we get an engulfing candle, right, to the point where they created new highs up here, right, because they're higher than these highs. So what I want to see now is, okay, cool, was this a real sweep, and now they can go ahead and make their way higher? So I will identify the same thing, right? This was the last down candle here. This was the last down candle before all of this aggression higher, right? And so I'm going to mark off the top of that candle to the bottom of the candle to the right of it, like that. And I want to see if the dollar is going to hold that zone, right? For those of you guys who maybe maybe that was complicated, or you're like newer, even without doing all of that, what I'll do is I'll take my Fibonacci tool, right, and I'll run it from the low of the move I'm paying attention to the high of the move, and that's why I have that green line there. Well, I guess not necessarily, but yeah, right, to the high, and I'll identify everything in between the 62% and the 79%. And look, it's just pretty much about the same area, right? Just about the same area. Okay. And I'll use that as a cheat code. And that is what we call the discount price, right? Because if you were looking to buy anything, right, and it was at one point, it was costing $100, and now you saw that it was on sale for 60-70% off. I say this every week. Anybody would be going ahead and making that purchase. You get what I'm saying? If once you've seen that thing is 60-70% off, of course the buyers came into the market, and that's exactly what happened. Price was at a low point, then it reached a high point, and when price was at a 79% discount, people was like, oh, that's too good to be true. I gotta buy. And that's exactly what happened. We get the buyers bang, 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 bang coming into this thing. Okay, so now, until we get a true break of structure on we haven't gotten a true break of structure yet. On the 4-hour time frame, this is still creating lower low, lower high, lower low, lower high, lower low, still a lower high, right? So until I get maybe a breakout at least above, you know, this zone that they're trying to like flirt with, right? Until I get a real breakout here, a close above that, then it's you know it's not real, okay? But how can I target them going above that zone, right? And that's what we would identify as our now current buy side liquidity, right? How can I target above that zone, right? How can I target above that zone if they are going to go that way? So what I would do is I'll be patient, right? You'll wait to see if price is going to trade back into this gray box, into this area, right? To see if price is going to trade back into this gray area and whether or not we're going to close lower into this, or if we're going to just obliterate it in the first place, or am I going to get more of a it came down and then it wicked away, right? If I see something like that, if I see, oh yeah, they come down into it and they wick away, that is an added confirmation for me that okay, cool, you know, your boy might be time to go ahead and start looking for, you know, I'm looking for buys in this type of an area based on the time that we get into this price. I reiterate this every week that the most important thing that I'm looking for when I trade, the two most important things is I'm looking for the market to be at a specific price at a specific time, right? So when I get up to my chart at 8 a.m. in the morning, right? Or at 3 a.m. if you're a London session trader and price is at certain points of interest, like this one, and we see a rejection away from here at that 7:30, 7:45, 8 a.m. We see a rejection. Not only did we come to the right price and move away from the right price, but we came away and moved away from the right price at the right time, because that's when it's time to get busy. You feel me? And once I see them trade into this area, then I will look for the same exact thing I just showed you, except on a lower time frame, right? So once I see them trade down into this area and, you know, see them shoot out, guess what? That's what this was. It was them trading down into my area, because I showed you guys my area. This entire blue box is my area, right? So I wanted to see them shoot down into my area, and then now what? I'm targeting the fair value gap right here. Right? Same thing for this move. I want to see them drop into this area, and then I'm going to go down on the 15-minute and I'm going to look for what? The same exact thing, guys. I'm going to look for the same exact thing. I'm going to look for a bearish move, extremely bullish move, and then I'm going to look for the last bearish candle, which we would call the order block, and then after I find that, I'm going to take my buys from right there, for example. Okay, now I don't actually trade the DXY, and I'm not going to go any lower because I'm not actively taking trades right now. I don't typically go lower than the hourly when I'm just doing analysis for the week. But at the end of the day, when price, at the end of the day, that's what I get from looking at the DXY, and I'm gonna take this information and I'm now gonna go apply it, you know, to my other charts and my other biases. But yeah, that's what I'm kind of peeping right now on DXY. But in other news, if we were to just obliterate past this zone, then I mean, you can actually use this as a resistance now, right? So right now it's our support, right? But if we were to just blow through this, you can actually pay attention to that same zone on as an opportunity to the downside. Because like I said, if we're really going higher, there's no reason they should really close below this zone, right? If we're really going higher, even if price trades to this zone, it should only be for a moment. It should only be for, you know, for just to investigate, and then I should see them go to the complete opposite direction. Right. So that's what I'm seeing on the dollar is that, you know, I'm paying attention to this zone. I probably won't take any trades until I see DXY in this zone, or if they were to break out, you know, to the top side and never even revisited it. That happens sometimes. But I'm pretty confident though that they gonna make their way back down to there. Okay. So with that being said, and this is the hourly time frame. On the week, let me go ahead and look at the weekly real quick. Right, on the week, man, so it's one of those it's a hard position to be in when you see the weekly time frame is bearish, right? You have 1 week, you know, bearish week, 2 bearish week, but they did what on this last week? You can see the candle dropped all the way down here, just to close all the way up here. Clearly, we had resistance. No close down here at all. You feel me? And so what I would want to see this week is maybe a trade back down, to the top of that thing. See them come a bit lower, right? Actually, this right here, this gray box is where I have that that fair value gap on the lower time frame, right? So literally exactly where I want to see price, right? I want to see them come just one more time down, right, into maybe the top of this candle over here, right below these lows that they swept. Just one more time, I want to see them come down into that. And that is where we have our gray box on the hourly time frame, right? Our gray box is right in here. I ain't gonna lie, guys, that thing is sweet. And so that's what I want to see. I want to see continuation of buys on the DXY, which means I'm looking to see gold start to continue to sink. I'm looking to see NAS sink. I'm looking to see US30 sink. I'm looking to see these things tank, man. But at the end of the day, you know me, man. I'm a be a student to the market. Same thing last week. Last week I was bullish, right? Last week I was bullish, but you could clearly see last week wasn't bullish. I was bullish, but last week wasn't bullish. You feel me? So it's like, but I adapted quickly, right? Like once I saw at the top of the week that we formed a high on Tuesday and they broke these lows and we got a lower low. As soon as I saw that, I was targeting my area that we have been looking at for a couple weeks. You feel me? So at the end of the day, that's what we got going on with the DXY. So let's take that information and maybe let's start off with U30 and NAS today, man. Right? Let's start off with U30 and NAS. Let's go ahead and see, it did me crazy last week. Let's see. Let's start off on the daily, of course. I think I want U2 US30. Right now, I do more so trade NAS than US30, but I mean, you just can't beat US30. Sometimes US30 it has better setups or it looks better, than NASDAQ. So sometimes US30 is what I'll take, but what I've been taught is that I can use US30 as a confirmation for NAS, similar to how people use DXY as a confirmation for the rest of the market, right? So I do like to check out US30 and NASDAQ, and usually they should be going the same direction, but what you'll notice right now is that they're actually not going the same direction, right? We call that divergence, right? We call that index divergence, at least smart money divergence. But at the end of the day, when you go to higher time frames, the less that you'll see those divergences happening. Now, given that I expect to see DXY continue bullish this week, of course I would like to see US30 and the rest of them continue bearish. Okay, now you can see on this last run low on this weekly time frame for the US30 that they closed below this low over here on the bang bang, right? Over here on October, they closed below that low. Cool. And then we traded up higher and we did what, right? They came up to, had this buy side liquidity, bang, boom. And you notice, right? No close above, right? Just a wick, could have caught a sell there, boom, wick, sell off, right? And they not only sold off, but now when I go down to the lower time frames, even more onto the daily now, right? We took the buy side liquidity, but we never really closed above that. This is cute, but no, we were looking at it on the higher time frame, right? Never really closed below that. Above that. And then we started to get what? Lower low, lower high, right? Lower low, lower high, right? Lower low, lower high, right? So I'm starting to see that breakdown. Okay, so I do want to see, and these lows you can see over here, these lows were all closed. They all closed below over here. Now they didn't close below the body. And honestly, if I use the body of this candle real quick. Shoot, if I use the body of this candle, they definitely closed below. Closed above that thing. So the next place for me to pay attention to would be the body of this candle. Even if you didn't want to use the wicks, for anybody who wants to nitpick, right? But even if I go to the next high that they would have been interested in, guess what? They did not close above it. They wicked above it and then they traded away. Trust me, they always gonna get their liquidity. They always gonna get their liquidity. So we saw them trade above it and then they traded away. So from where they just attacked, right? So from this high here that they attacked and this high here, right? What are the most recent lows from those highs? Well, you got this low here that they already closed below, and then boom, I got what? Sell side liquidity down there. Okay, so that is where I'm paying attention to long term, right? On this beautiful US 30, right? For at least to see them go ahead and drop down below these double bottoms over here and get some action popping. Now, with that being said, being on a daily time frame now, I identify a couple things, right? I identify a couple things. First and foremost, I got daily sell buy side liquidity up here. And at the end of the day, if you don't know what liquidity is, just understand that liquidity is what pays the bills. You feel me? Like, liquidity is where money is located. You can write that down. That's what liquidity is. Liquidity is a pool of money, right? That's why, I say, yo, are you liquid? I'm saying like, yo, do you have money? That's what liquid means, right? It means I'm fluid. I can move, right? So at the end of the day, when we looking at these buy side liquidity just means liquidity to the top. Sell side liquidity just means liquidity to the bottom, basically. And liquidity is located above highs and lows. Why, Maverick? Because people place pending orders above highs and lows, right? And most people who barely know how to trade, or you do know how to trade, whatever the case is, when you're taught, you put your stop loss above the high. That's how you trade, right? You put your stop loss above the high. So that means every time a high gets rated or every time a low gets rated, there is liquidity being collected. You get what I'm saying? There's people are bringing money into the market because either they were entered into a trade because they had a pending order or they had a stop loss or whatever the case may be. Excuse me. So now I'm drop down to the 4-hour on here. So yeah, I want to see some bearish price action, and I want to get myself into some bearish opportunities. Now, last week, which started right here, let's put a little dash on that thing, right? Bang, right? So last week, we had market opened up, we traded lower, and then we traded higher. Was last week bullish? Yeah, last week was a bullish week, right? This was last week, right? So last week was a bullish week, right? We had the markets open up down here. Yep, right here was where the markets opened. We traded down here. This was the low of the week. And then we traded up. This was the high of the week. And then they came on down and they closed around what? Right here is where the market, right here is where the market closed on Friday. Right. So now what I'm interested in seeing, now that we've had a good old buy side, and let me actually one more time, right? One more time, to me, right? Looking at the higher time frame, this is why the higher time frame is important. I see a downtrend. I see a downtrend since easily January. I mean, if I want to count this high, since December, I see a downtrend, right? It's just really consolidation here. But ever since we've hit February, we've started to see downtrends: lower low, lower high, lower low, lower high, lower low, lower high, right? So this stuff to me is just that. It's just a pullback. It's just a retracement. And typically when we do have these retracements, is those fair value gaps where you want to pay attention to the most when you're looking to see the markets have a retracement. Now, for me, on the lower, being on these lower time frames and being what day it is today, today is Sunday. So I don't necessarily look for the most clear moves on a Sunday, right? I look for just to pay attention to what is setting up. And then I look for the clearer moves at the times I trade on the other days of the week. Now, just to be like real though, like I'm not looking to see sells on these things until I see the dollar trade back to my zone. That's the way my confluences work, right? Once the dollar is here, I want to start taking advantage of those sells that we are going to have, right? And so I'm gonna pay attention to the daily buy side liquidity I just gave you guys, and I'm also going to pay attention to this lower time frame liquidity here. right? So those are the two places. And how can I describe this? The liquidity is important because in order for them to deliver to down here, for example, right? If they are going to make their way down here, okay, if they are going to make their way down there, they need like power to do that, and power is in the liquidity. You feel me? So boom, we got lower low here, and then now you're seeing them shoot up. A whole bunch of people like, oh, the markets are going up, etc., etc. They just on their way to get that liquidity. So honestly, what I'll pay attention to is when does this liquidity get taken, right? If it's 3 a.m. in the freaking morning and the dollar is right here in this gray box, and on top of that, we are up here taking liquidity, guys, that is when I take sells, right? Or, I mean, a buy if it was in the inverse, right? But at the end of the day, I look to see the DXY reach my point of interest at the same time at a ideal time like a market open, or during the heat of a major session like London session or New York session. And then I look to see that we are taking a liquidity on a lower time frame on my actual asset. You feel me? So I would keep my eye on that 32,500 level for US 30. Keep your eye on that 32,500 level, and just be aware, because remember, we want to sell when the market is pushing higher, and we want to buy when the market is pushing lower. So it really might be one of those instances where the market is blazing up past here, or if we make it past this zone, maybe blazing up past up here, just for it to turn into what? The same thing that I broke down over here, a wick, just like this one here. You feel me? The market was going ahead and blazing up, right? Same thing. It's actually the exact same look, right? Boom. We had a lower low, and then we had the market trade higher, and we had another low, and then we had massive, break up, trade higher, right? So boom, we had a market give us a lower low, and then boom, market trade higher, and then massive push up, right? And so off that massive push up, I mean, just look, it's the same thing, right? Boom, they came up, and then what did they do? Bang. Soon as they took liquidity above this high, right? Right? Don't it look the same? You don't even know. You don't even know if we looking at the past no more. You feel me? It's like as soon as they made their way above that high, drop. Okay, gave one more opportunity above the high, drop. Right, gave one more opportunity and went ridiculous. Not only did they trade above this zone, they traded all the way up to this buy side liquidity and failed to break it. They just closed at it, right? And guess what? Dropped to Narnia. You get what I'm saying? So at the end of the day, they starting to price in their movement. So what you think? I just showed you this same exact move. Oh, the only difference is they went lower on this one, right? Instead of it being lower and then this high was a little bit higher, it went all the way to the low. All the way to the low. And then we seen them trade higher. Boom. They closed above this liquidity. Okay, cool. So let's see how they respond when we get up to this area, right? So 32,500. 32,500 is the level that I'm looking at on U30. I'm going to set my alert. All right, I'm going to set my alert for once we come up there. And honestly, I should probably really set my alert for the bottom. All right, it's really what I should do. So yeah, that's what we got going on US 30. But yeah, once I see that, then I'm gonna go down to the lower time frame, and I'm gonna do the exact same thing, right? Like even if you look at this example over here, it's the opposite of what I just showed you on the dollar, right? So boom, you can see here we traded above, took liquidity, right, and then did what? Literally, and on a higher time frame, right? On a higher time frame, they traded above, didn't close above, took liquidity. Once I seen that, I'll go down to the lower time frame and look for what? For the fair value gap. And we can see, boom, right here, big candle to the downside. Right before this big candle to the downside, I want to look at the candle that was right before it and the candle that's right after it. Go ahead and put my little area down like this. And very much on that next 15 minutes, right here was 3 o'clock, and then boom, right here, 3:15, market traded higher, gave that high. That's an area opportunity. That's an opportunity to buy, right? If you were scared to buy, you could buy here, right? That's three. Now, well, this one's random, but these are both two opportunities, and probably multiple top opportunities on a lower time frame. You could have got in, right? And then you could target what? liquidity, right? So you could target the liquidity over here on these lows. You could target the liquidity here on these lows. I probably would have went for right here, and you see that I traded right below that, and then we did what? Got traded up, came back down, then pulled back, gave the high, and then boom, now we're getting a very similar setup. Okay, so that's what I'm looking for when it comes to US 30. All right, now with that being said, I should hope that NAS is exactly the same, right? That would be great if they were exactly the same, but they're not. So yeah, looking at US 30, it's a little bit more evident. So honestly, this week I most likely would trade US 30 over NASDAQ if the setup is just way cleaner, right? Now, if I go on NASDAQ now and I see this setup, it just might be it might be higher up, then it might be more opportunity, right? But let me check us out on the weekly. Right, even on the monthly of NASDAQ, you can see this monthly candle has been extremely bullish. Right now, as of right now, if the month we're going to close today, that would be a bullish engulfing, which would kind of give me the feeling that they wanted to actually trade higher. Now, I think it's all going to crash and burn, but I mean, I could always be wrong. I would be okay with being wrong, right? But that was the open of March. Okay, so we'll go check that out. Right, where was the open of March? Right now, I hit it on the weekly time frame. When I hit it on the weekly time frame on NAS, when I look on the weekly time frame and I see, okay, cool, this is where March opened up. Right, in order for that candle we were just looking at to be a bearish candle, right, they would need to trade lower than that open, right? And I'm not gonna lie, I definitely see that thing being, potentially being a bearish candle. Now let's look at some more evidence, right? So boom, boom, lower lows and lower highs, right? On a weekly time frame, you can see lower low, lower high, lower low, lower high. Really, this is just a lower high, right? Lower low, lower high, lower low, lower high. That's how I feel. But they did come in here and give a higher high, and then we did get a higher, higher low. Then we did get a higher high. Then we did get a higher low, and then here we given some higher high action, right? So it's very possible that they are on the pullback, but it's like not in alignment with what I see on the rest of them. Now, over on when it comes to this high that they're attacking right now, and I'm gonna put buy side liquidity. Right. So when it comes to the high that they're attacking as of right now, I've been looking at this high for a while, and this high was from September, and they barely had tipped it in February. When that interest rates dropped in February, they barely wicked it, and then they did what? They traded away how I be telling y'all, and we got what? Lower lows, lower highs, lower lows, lower highs, lower lows, because this low closed lower than that low, all right? And then we just get a massive push up to the upside now, to continue this little bit of an uptrend that they've been moving in. But I'm gonna just be honest. This is why I say that US 30 is a little bit more clear to me, because there's any with what's going on right now, I would want to go down on the lower time frame on NASDAQ now and start to look for those opportunities where they're gonna go the opposite direction. But as aggressive as we've been buying up, we've been in this miniature buy uptrend that they've manufactured or that they've created. So it's like I need a little bit more information on NASDAQ. You feel me? I need a little bit more hands-on. But again, overall, my bias is for these things to go the opposite direction. NASDAQ does give she wants to shoot for some highs, though. You feel me? She does look like she either wants to go, trade into this fair value gap here, right? Further up into the top of this, or take this high altogether, right? That's the way that they are maneuvering right now. Based on my experience, you feel me, and what I'm used to seeing in the market, it doesn't look like they're ready to drop, right? But that's the thing about NAS. NAS is really volatile, and be honest, NAS is really volatile. Things can change very quickly. So at the end of the day, that's why I say I'm just keeping my eyes open. And the second I see anything like what I just told y'all, right? The second I see on the higher time frame, we already done the wick, right? If I see any type of a lower low, and then from that lower low, a trade back into what the fair value gap, right? Then yeah, once I see that, I'm in there on NAS, or at least I'm with it on NAS. But if I have a better opportunity on US 30, I think I'll probably do US 30. Now let's say that the dollar completely and totally just obliterates that zone and just does not respect it. Then I mean, actually, for real though, I probably then would be looking at NASDAQ and looking for NASDAQ on the potential buys, because NASDAQ has a more of an uptrend than US 30, whereas US 30 is in more of a downtrend right now. Right. So it's just like little things you just may allow me to trade with what makes sense, or trade with my trend or what I see going down. So yeah, that part, right? But these things that I do on Market Outlook is so many times that the stuff that I say on Market Outlook are the trades that I win throughout the week. It'd be the trades that I didn't say anything about on Market Outlook, or I didn't find on Market Outlook. I found it another day. Those would be the trades that cost me money, or I'll lose money. But I'm just being real. Like, when you sit down on a Sunday, like when we hop off here, just, hop on there and, like hop on there and like find, look at your setups, look at your favorite pairs. You feel me? Mines are clearly indices and gold, right? That's like what I trade for the most part. And I trade Euro USD, I trade GU as well. But for the most part, like it's just those. So that's that on those two. And it looks like, NASDAQ is the most different. It looks like SPX trading similarly to US 30. So yeah, definitely interested to see how this week goes. But as of right now, I would love to see continued bearishness on those guys, right? Now, gold. Oh yeah, we caught a nice one on gold on Friday. Now gold. Yeah, gold is similar, right? Similar. It's actually one of the reasons that I took that sell on Friday, right? But boom, same thing, right? Over here, we got this buy side liquidity, right? And you can see that overall gold has been, and gold is an interesting topic, especially because I'm not gonna lie, I've been told silver is about to go to the moon because of all the war. They make bullets out of silver, missiles and stuff out of silver, right? So excuse me. So at the end of the day, they say silver is going to go through the roof, and usually silver and gold trade alike. So, excuse me, we'll see how that goes. But in my, from what I've been waiting for on gold, it's interesting because we do have these double tops, aka buy side liquidity. It's just that when there's two highs exactly next to each other, that's really saucy, right? So we call that double tops. So I'm aware of those, but you also take into account, right, that we had a lower low, lower high, lower low here, and then we just get a massive, shoot up to the upside. Okay. And this is where I was explaining that, even though we do have that up there, we also got triple lows over here, right? Three lows that was literally right next to each other, that they could target underneath there. Okay, super simple. All right, now my thing about gold was that they did just take this high here from April, right? This was the most recent high after they broke this one, right? And they broke that one back in January, right? Back in January, they broke that high. Okay, so my thing is that this is that next high, and again, they gave a wick here, right? They gave a wick there, traded away, and then I took my own advice, right? I went to the lower time frame. Right, went to the lower time frame, and honestly, there was an opportunity here as well on this one, but I didn't catch that. But at the end of the day, I went on my lower time frame, came to this, market. And this was a harder trade. It was, a little bit difficult. But at the end of the day, they traded above the buy side liquidity here. They shot down. They traded back up here. And what got it for me was this high was formed, and then we came back down. We gave a lower low, and then after that lower low, they wicked, right? These bodies never went away above this body, right? They wicked up into that. And so once I saw that, right, then it was just a matter now going to the lower time frame and executing, right? So the first one was, in here, And then the second one was lower, well, a little lower down, right, on the pullback when they came back up and then took that opportunity to catch the sell. So for me on gold, I would love to see us continue lower, right, is what I would love to see. I'd love to see us continue lower. Again, similar to what I was saying about NASDAQ, because they all correspond, they all correlate, all right? Only thing about gold is that she's been the most bullish. So like since like for the past, I mean, honestly, the whole year, all year, gold's been bullish AF, right? We did have them start to price in sales here last week, I believe it was on Tuesday, right? But then they gave them big shoot shot up when the interest rates dropped on Wednesday, and now we got boom here, lower low, right? And to see a lower high and trade the sell from there is what I will be looking for, right? So it's two ways that I could go about that, right? Two ways I can go about that. Boom, I can measure the move here that broke the low, and I can pay attention to that same thing I was saying, that discount area between 62 and the 79%. Or I can go down to the lower time frames and I can pay attention to the place where the move where we broke up out of this thing in the last bullish candle. The last bullish candle was here, right? It's the last like real bullish candle before we broke this low right here. It was this bullish candle, right? And then after this bullish candle, this was the move that broke it. And then afterwards, this was the candle, right? So could identify, boom, bottom of the candle, boom, high of that candle, right? So I'll pay attention to that area. What timing, what price are we going to reach when we get up there? So yeah, I'm gonna pay attention to that zone on gold. What's that? 1988. We're at 1975 right now. So yeah, to see a bit of a rally up, especially seeing how they, excuse me, how they wick down below these bodies right here. Like it was super aggressive wick down into that. And then now, they're starting to give the aggressive. They gave a little bit of an aggressive move up here, higher low, aggressive move up, right? And then they traded back into the fair value gap, but they didn't respect it. They swept down here, and now they're so I feel like the move was great from up here, but anything after that, for my style personally, I don't care for anything unless we come back up into this zone on gold. Like my thing about gold is that gold has really big ranges, so sometimes it could be hard to catch the risk to reward that I want. So I like to be really picky when it comes to gold. I just like to take it when it's in those specific zones that I'm looking for. You feel me? So at the end of the day, that's my kind of thought process when it comes to gold. And let me actually get my charger once. Can't have the laptop dying, that would not be a good look. That would not be a good look at all. All right, cool. So yeah, that's what I'm looking to see on that's what I'm keeping my eye out on for gold. But this is like a little bit low probability for me until I see the DXY being in that specific zone. And the only reason I say it's a little bit low probability is because even though I'm seeing these breakup structures on the lower time frame, I got lower low here on gold. Like yeah, this would be a great area for me to pay attention to coming back to. Like even on the hourly, it's really clear that this was the last bullish candle. This is that next candle. So this is that area I'm looking for. You can even go based off of, the last higher low, because this was that higher low before they broke it. So you can even just like, if you wanted to widen the range, right, you can kind of just look in that entire area. So that's like what, 1789 to about 1785, 1989 to about 1985. So yeah, that's where I would be keeping my eye out on gold is but just be aware that we are at and near all-time highs on gold. Like gold's never been as high as gold was at these levels here back in March of last year. And to think that right now we're in March again and like they're very close to those levels, and it being a double top at that, I'm not gonna lie to you. And on top of that, like with everything going on with the economy and with the war and everything I just said about the resources with silver, I like just be aware because there are times in, you know, like in the world, or there are times in the market when you will see gold going in the same direction as DXY. So it's not, that's why I say these things are not necessarily law, especially because, like I said, something could be going on. You feel me? Like anything could be going on. And like literally, you know, you'll see it affect the markets for it. And like I'm saying, with gold and the wars going on right now, they need gold for batteries, right? There's all types of reasons gold is needed. So there's so many different factors that could make it to where even if DXY shoots up, gold could take off as well. You get what I'm saying? So just that's why I say I like to be very aware. I like to have all my confluences happening at the same time. And if you are somebody who trades gold and you see it trade into this area, for example, and it's at the right time, but DXY is not in the right area, like you might want to keep your eye open because that's how you identify low probability conditions and stay away from them things. You feel me? So yeah, that's pretty much what I'm gonna be looking for this week. We'll definitely be looking for those. The last thing I said I'm gonna check out is Euro USD real quick. I will take a look at Euro USD. All right, we can definitely take a look at Euro USD. All right, and you know, Euro USD continuing. It's funny enough, like I didn't even notice that when I look at a higher time frame. So I love looking at charts. When I look at the higher time frame on Euro USD, clearly it's in a downtrend, right? Clearly you can see that, and clearly, or potentially, right? Potentially, we could aim for this next low down here from freaking 9/11. Oh, no, I didn't mean to do that. Right. Right, that's a next target for me to pay attention to, because they kind of came to this low, but that's not even like, is that a real low? Is that a validated low, I should say? It's a little suspect, but we'll say there's a liquidity under it, right? And you can see that they traded down into it, and then they wicked and they traded away. They never went below the bottoms of that candle. So we could be aware, right? If they wanted to do some reversal type action, but I'm sorry, no. Like Euro USD, all these things is gonna go down as the dollar continues to raise interest rates. On Euro USD, what was it that we was looking for last week? Right, because on Euro USD, I want to pay attention to this. Let me go back to the weekly for you guys. I want to pay attention to the way we moved in the seasons. And that's something I always look at, right? It's like, just like how the market has London session, New York session, PM session, and just like the month has 4 weeks and a week has 5 days, like, you know, a year has 4 seasons. You feel me? So I like to pay attention to the way we're moving in seasons, because, and oh yeah, and that's the other thing I was going to point out is like, yo, when the market did give this higher high, and then they came down and we gave a low, and then they gave a lower high, and then we broke this low right here to give this low. And once I seen, like, it's convenient how we just traded back at the top of the year, right, to this previous low. This previous low was also in March 2020 when COVID began and we took off to the upside in the first place, right? So very convenient to see that we traded back to that zone, right? Also, when I go back down to the daily time frame, right, it's also when I go down to the daily time frame and paying attention to, like I was saying, the seasons, right? So if I say, boom, this was January of last year, so that was the first quarter. I think is better. There's 4 quarters in a year is a better way to put it, right? First quarter, second quarter, third quarter, All right, fourth quarter. Boom. Third quarter, right? I mean, fourth quarter, right? So at the end of the day, right? Boom, starting off the year last year, what do we have? We had bearish price action. They traded up higher a bit, right? But then we got what? Bearish price action. And then second quarter, what? Pullback, bearish, right? And then third quarter, pullback, bearish, right? Fourth quarter, which is holiday season and the end of the year, right? If you're somebody who trades and holds your trades for a year, when are you going to take profit? You're going to take profit at the end of the year, right? And guess what? Sell all year. And then in order to take profit on your sells, right, you have to then buy them back, right? So guess what? They bought and we came right back up to where? We took the highs of second quarter, but more importantly, like I said, we came back up to this low from 2020. All right, so I like to pay attention. Like I said, those are confluences. Those are things that are going together. They're giving me like signs. You get what I'm saying? And so going out of the fourth quarter, we had higher highs, higher lows, higher highs, and then boom, right here at the this is first quarter of this year, right? So now we're in first quarter of this year. We're about to finish the first quarter and go into the second quarter. And I'll show you in a second the last year if you remember, right? But now looking at this year, same thing that we started off with last year, right? Last year, the market started off what? Traded higher, then we traded lower, and then we came back higher. We took to the highs here, and then we dropped off and never came back again, right? Similar thing to what's going on right now, right? The year just started. We had them trade higher up. They gave the high of the year potentially just for them to do what? Drop down, give us a lower low, gave us a lower high, gave us a lower low, right? And now we're getting a potential what? Lower high, okay? And in the same area, right, in the same area of that, what I like to call my discount, right? Boom. I mean, my premium, I guess, in the opposite direction, because when you're buying, it's a discount, but when you're selling, it's a premium when you're selling it for 70% higher than the cost, right? So you can see they came up into that premium and then we dropped away, right? Even if I didn't want to go based off the Fibonacci, because you don't need the Fibonacci's to trade how I look at the markets. But if I look at this last bullish candle, which was here, and I measure the bottom of that to the bottom of the next candle, right? And that's that zone right there. Guess what? The candle never closed above that. It was just a wick, and then we traded down lower. So what can I keep my eye out for? All right. Now, again, I want to look for sell opportunities on Euro USD at the same time or at the similar time, to the dollar reaching that low and holding that low. Okay. Like, it's sometimes catching reversals could be dangerous because at the end of the day, for pretty much all of March, I would say, right? Pretty much all of March, because this was the beginning of March right here. So this was the open of March right here. And ever since then, we've traded higher, right? It's been a bullish month. Okay. Now going into the fourth quarter, or even if you remember from looking at the higher time frames, I mean, on the higher time frame, we're in a downtrend. We're just at the top. We're at the lower high position of that downtrend. So it's been in an uptrend for a minute, right? Since the beginning of the year, or the end of since the fourth quarter, but coming into the beginning of the year, you can see weakness, right? Like you want to be able to, what I've been able to learn how to do is just start identifying weakness in the market, right? This right here, this is not the same as this, right? And it's definitely not the same as these, right? The market has shown, it was very strong to the upside, right? A lot of bullishness just for us to reach this area and then get what? Get weak in the knees, man. Get weak in the knees. You feel me? So I want to see confluences with Euro USD right here. You can see that last week opened up right about here, right? That was the open of last week. Traded lower, and then they gave us a high on Thursday, and then to finish off the week, they gave us what? A lower low here, right? Gave us a lower low there, but it's all suspicious, right? It's all suspicious. They closed lower than these lows, yes. But they did come down into what is, as we've pointed out, this fair value gap, right? The last down candle here, the candle on the other side, they literally wicked into that and then they traded away. So I'm in a state of like, yo, I want to see how obvious, they're going to be, with attacking essentially the sell side liquidity here. And of course, the lows that we've identified on a higher time frame, of course. But right now, this would be the daily sell side, right? So how do we make our way? What price action, has to happen for us to make our way down there? Now, I'm just being transparent again. I want to see. I want to see I want to see the Euro USD position itself for sells at the same time that DXY is positioning in this, right, inside of this fair value gap. If DXY just obliterates this, right, and we see them close lower, they close lower down here, then that would invalidate my opinions on Euro USD. But what would really validate my opinions on Euro USD is if we seen the market drop down into this box and seen them pull up, right? We see some type of rejection from that. If I see some type of rejection from that, then yeah, I can look at Euro USD and say, okay, well, where's Euro USD pulling back to, right? Are we in my premium area, which is up here? Right, that's my premium on Euro USD, right? And if I just use the fair value gap, right, before they broke this low, right, because it was higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, right? So, well, lower high. So before they broke this low right here, okay, before they broke this low right here, this was that, before they broke this low right here, this, oh shoot, my bad guys, right? Before they broke the move that broke this low, I'm sorry, the move that broke this low was this move, right? This down move created a lower low, right? Because it was higher lows, and this created a lower low. So paying attention to the candle beforehand, right? And the candle after, right? And I measure that gap. Right? That is my zone of interest, right? That is the area that has my eye, that has my attention. Okay, so that's my thought process on Euro USD, looking for sells up there in that area. Now, with that being said, if you are good and like you followed what I was saying today, then the same things I told you, like I look for the sells, but if you have the skill set and you understand what's going on, that means that if you were to identify buying opportunities to these levels, then you can take the buying opportunities. Right? Because at the end of the day, if I'm looking for sells from here, that means that anything to there is in alignment with those sells, right? So if the DXY were to line up and I was able to identify, oh yeah, DXY looks like it's going to sell to the zone that I'm looking at. And at the same time, Euro USD looks like it's in a position to buy up to these zones, then I can take those buying opportunities. And that's a way that you can pass an evaluation or get a withdrawal in, right, before it even gets to those zones. But the most highly probable setups are the ones that you identify at the top of the week, and then you just wait. You feel me? You just wait, especially when you don't have experience buying and selling both ways or catching the entire move. You feel me? Like it'll be better to just wait, man. But that's all I'm looking forward to going into this week. I'm not gonna lie, like nothing crazy. We don't, like I said, we ain't got no CPI, no FOMC or nothing like that. So I'm just looking for healthy price action, man. Healthy price action. Nah, I'm not gonna lie to you. I have been very picky. I'm doing a one phase account. I'm testing that out to see if that's something that I can teach. Because that one phase account, you don't even have to do the evaluation for two phases. You do the evaluation for one phase and you're funded. So I'm seeing about that. But either way it goes, man, I appreciate you guys. I hope you guys got some game, some value. Like I said, if you got game value, just press that like button. You feel me? And share this thing out. You feel me? Share the YouTube channel with people. It helps me out. It helps the guild out. And next Sunday it'll be the same type of time. If you in the guild, 6 p.m. all week, you guys know the vibes. Q&A on Tuesday and Friday, and post market the rest of the days. You feel me? Post market analysis the rest of the days, man. But I appreciate y'all, and y'all have a wonderful night, man. Let's get it this week. Trade smart. Don't be out here trying to gamble. Don't be out here trying to risk it all for the biscuit. You feel me? Peace.